All right, everybody. Let's get back to. Okay. You guys see my screen?
Yes. Trisha,
Okay. Yes, ma'am.
hi. So we're going to get a copy of the slides, right?
Yes, ma'am.
Okay, thank you.
You're welcome. All right. We're going to take part of our next presentation, part of the presentation, and we'll just continue. We'll continue. It's not split up between people anymore, so we'll just continue as if. Okay. So the role of the Rural Zone team leader and their team. You're going to understand the basics of the program, promote. The Rural Zone team is going to assist the team leader in promoting the program within the community, especially members that are real estate brokers, CPAs, or within the local media or chamber of commerce. Team leader is going to be the one who is designated to sign off on the Rural Zone certification form. If that changes, someone leaves, whatever, someone new comes in, please let me know that the Rural Zone team leader has changed. And the team leader is going to work with me to submit plans for rehab and for approval prior to the work beginning. And they're responsible for submitting the Rural Zone annual report, which we will talk about. So here's a little document you can print out and use to ask, a business when it approaches you about taking the Rural Zone tax credits. Will the business create at least 2 net new full-time equivalent jobs? No, then the business isn't eligible. Yes, we're going to move on to question 2. Is the business's location within your designated rural zone? You're going to check your official map, which you guys should have gotten with your award letters, but I'll include it with the pack of email that I send to everybody. No, then the business isn't eligible. Yes, you're going to move on to question 3. So does the business have an eligible NAICS code? You're going to check your rural zone approved code list. No, it's not on the list. The business is not eligible. Yes, we're going to move on and assist them in filling out the rural zone certification form, and you can send it to me because you guys will have to sign off on the second section. So the business will fill out the first part, you'll fill out the second, and then you'll send it to me to sign off on in the third part. So that was the end of that. What was I wanting to? Oh, and like I said, during this presentation, there'll be a method, vehicle in which you can potentially get an NAICS code approved for your downtown. So if something, I know we had an axe throwing business that was approved in, I don't remember which community, but it's only approved for that community. So if another community wants to come in and have that, something that's not on the list, then they need to um, work with me to get it on there. Is there a question? No? Okay. All right. So that was that. Let's move on to er, sorry, this I don't know why this slideshow starts out with this dark of a. Can you guys see that new slideshow? Anybody?
Yes.
Okay, awesome. Thank you. Okay, so this is the next level up. Now, this is where lunch and learns, you could do lunch and learns or something like that in your communities and, ask businesses, CPAs, real estate agents, bankers, whoever to come so that they learn about this and they can, even if they don't know a lot about the credit, they have it so they can spit it out and say your name perhaps for the folks to get in touch with um, for more information. So the rural zone certification form is the form that the team leader is going to sign off. Um, and this allows a business to participate in the program when they file their tax return. It lets DOR know, listen, they've gone through the appropriate channels, they're in the zone, they're a business that's able to participate, that kind of thing. So before claiming the rural zone tax credit, the entity or investor is going to apply for certification to become acknowledged. This is going to validate that the business location is within the currently designated rural zone and the required jobs are being created under an acceptable NAICS code. The rural zone certification form is going to allow the company to participate in the rural zone program, and the form is going to include the name or entity claiming the credit. So that's who's going to go on the first line. The address and the parcel number. Contact information is of utmost importance and that I can read it. I've had so many that I can't even read how to contact this person or send them back their information. The officer name, title, and signature. In addition, we'll talk about that one in a minute. So here's the certified entity or certified investor is going to file the certification form with the rural zone leader. The team leader is then going to certify it that the location or investor is within the rural zone and the applicant meets all local ordinances and licensing standards. That's what you're saying when you sign off on part 2 of the form. So in addition, the rural zone team leader is going to check the NAICS code, ensuring that it's an acceptable one. The certification form is going to be forwarded to me for acknowledgement. Once it's acknowledged, the signed copy of that form and a 2-page letter is going to be provided to the applicant and the local jurisdiction. So I'll provide it to the rural zone team leader and whoever's email address is on it in part 1 for the business or individual. So the certification form sent back, signed from DCA, and the 2-page letter has to be attached to the income tax return of the whoever's claiming the credit. So if it's not, the credit could be disallowed. And that's some feedback I've gotten from DOR as well. I think it might be in the FAQs in this presentation, is that it has to be attached, or DOR could say, nope, you can't have it. Or more likely than not, DOR will ask the individual to provide it. So here's a screenshot of the certification. I'm going to zoom in so you don't have to, I know it's kind of little if you're far back from the screen of where this presentation is taking place. So here's part 1. As you can see, all the things I talked about, the applicant name, the location within the rural zone, and if the mailing address is different, the parcel number, which you guys will have, the NAICS code for the business creating the jobs, and it might not necessarily be the applicant because they may not be the one creating the jobs. So that's important to have, otherwise I can't process the form. Also the name of the business creating the jobs. And then a number of FTEs created in the taxable year. It's got to be at least 2 on that line, but if it's 2 on this form and it ends up being 4 by the time they file the return, they just file this form before they knew they were going to hire that many people, it's still okay. They're going to be allowed to have 4. They'll get credit for 4, not just the 2 that are on this form. This is not Bible. So say the rehab costs up there in the top block, say there's 10,000 more costs when the actual form is filed on the return. You don't have to get another form done, another certification form done. You can use this one. Just what's on the tax return will be Bible. This is just saying, okay, they can participate and this is their costs. Same with the investment. I don't anticipate a sales price changing, but perhaps it could. So as I said, the name of the business, creating the jobs, the signature of the officer, title, date, phone number, all that business. But as you can see at the top in part 1, the very first line is the investment, the rehab, or the job creation boxes. You can check one of them or you can check all 3 of them. It's up to what's happening. And they don't need to file a separate one for each credit. And they don't need to file another one if any of the numbers change. The job creation is more jobs or the rehab costs are more costs than what's on this form. Part 2 is where you guys are going to sign off on it. You're going to put when your rule zone expires, your signature, your printed name, your date, and title and email address. The reason why I added email address to that line is because sometimes the representative does change and I'm not notified. So then I can be like, okay, who's sending this to me? I have some kind of email address. And then part 3, it says send it to the OED mailbox. Do not send it to that mailbox. Please send it to my mailbox. I think the form online has changed to my email address. Sometimes things get lost in that email address, in that email mailbox. Insert eye roll. Okay. We're going to go through the filling out a rule zone certification form. So the business is interior design, their NAICS code is such and such, their address, all the information's there. They hire 4 new jobs, and they are spending $40,000 in building improvements. So here we go. We're filling it out. You're going to click the rehab. You're going to check off the rehab and the job creation boxes. You're going to put their rehab costs at $40,000. Fill out their address, business address in the rule zone, their mailing address, the business name, their parcel number. And you don't have to put their name of business creating jobs if they're the ones creating it. But you can, it's up to you. That's not obligatory. So there it is. You're going to sign here in the circled spot, signature of representative. And that's it. Okay, you're not going to know this because, okay. Claiming the credit. The credit can only be used against Georgia income tax liability. And like we said earlier, a dollar for dollar reduction of income tax owed. The amount of the tax credits for a taxable year cannot exceed the entity's income tax liability. Oh, snap. I got to change this. It's 5 years. Unused income tax credit can be carried forward for 5 years and applied against future state income tax liability. This change also occurred on January 1st, 2025. All the credits, like most of the Georgia credits, it was changed to half of the time that had before. And I just opened up this presentation from a couple year ago one. So I apologize.
Cynthia,
Yes,
I have a
ma'am.
question. For those changes, are those changes retroactive to the ones that were already in effect prior to that? Or just the ones that come into effect starting 2026?
Ones that come into effect starting 2025, this happened. I opened up an older than I thought version of this presentation, but it's only 5 years. And if I meant to mention this in the prior presentation also, each year is a standalone year. So if one year the business and the investor and the rehabber qualify for the credit,
Mhm.
the jobs are created, all that, that's fine. The next year, say the jobs aren't there. Well, there's no clawback for the year that they already filed and took the credits on.
Mhm.
It's moving forward. So that year, since those
Mhm.
jobs aren't in place, nobody gets to take the credit. So then the
I have
next
a
year,
question.
go ahead.
Again, this is timing, and for this example, where so again, this is a different project where the entities are two different entities. In 2025, the business owner or the property owner has completed the rehab, but then the jobs in the business won't come until 2026. So I know they can't redeem the credit for the rehab until 2026 so they wouldn't file anything in 2025 even though their rehab was completed in 2025 other than certifying.
If you're talking about an entity in your rule zone, their receipts of the
Mm-hmm.
rehab have to have happened January 1st, 2026 or later.
Mm-hmm.
So they won't get any rehab because they incurred the costs prior to the rule zone being in place.
Well, so our rule zone actually started in 2025.
Okay. No bad. My bad. Then yes. Yes, they will just not be able to, their credits won't be triggered until the jobs are created in 2026. So that's when they will start taking them then. My apologies. I forgot there was some folks taking a refresher course today or folks that
Yes.
had never seen this presentation. My apologies.
Okay, thank you.
You're welcome. Does that answer it?
Yes.
Super. Okay. So it's like I said, we're saying the same things multiple times today. So in claiming the credit, it can only be used against Georgia income tax liability, and it's only for 5 years, not 10. And when I send you this, it will say 5. I apologize. Don't take notes on 10, take notes on 5. 5 is the carry forward if credits aren't used up. So in calculating the full-time equivalents, the aggregate of the employees working 40 hours per week equal one full-time equivalent job. So if you're talking about full-time equivalent jobs, it's usually broken up into 2 or more people. And there's a very specific way in which the credit is calculated. You're going to look year over year increase. So you're going to look at the same time frame as you did this year. Now, businesses that open midway through the year, they're only going to, divide. When I show you the form, they're only going to divide by however many months they were in business, because not every business opens on January 1st of a year. You could start on October 1st, then you're only going to have 3 months of open business. You're not going to have 12 months. You're not going to have to take those 2 jobs and show that they've been there for all 12 months. You're going to show that they've been there for 3 months. So that's where I say a certified entity which begins operations during this taxable year are going to they're going to base their initial eligibility on a period of less than 12 months. So, okay, the form, let's go back to this before I confuse everybody. So there's several things that have to occur when an entity or an individual take these credits on their tax filing, through Georgia tax filing. They're going to have the rule zone certification form, which states to DOR, listen, these folks have been vetted, they're okay, they can participate in the program. And then the individual or entity is going to attach what's called the Department of Revenue, Georgia Department of Revenue Form ITRZ. That is where the actual credit is calculated. The certification form just says you can participate. The ITRZ actually calculates down the amount of the credit. So here is the first page of the ITRZ. The business is gonna, or individual is gonna fill out the top part. You know, they mark which type of business they are: S corp, partnership, C corp, sole proprietor. Then they're gonna fill out if they're doing the investment, they're only filling out part 1. If they're doing rehab, they're filling out part 2. And if they're doing the job tax credit, they're filling out part 3. And we'll get to those parts momentarily. But as you can see at the bottom of this first page, they're going to put in the purchase price, and there's 25% of it. And then the maximum credit's $125,000. And here you can also see, this is an old one. It's divided by 5 years, which now it's divided by 3 years. So I apologize for that. Actually, I think I caught the DOR hadn't updated their form. I just sent them an email recently about that on a different form. And I think this form still hasn't been updated. But it is 3 years, and I'm sure they would let you know that. So the rehab folks would fill out part B, and they're going to see, as you could see, line 3 is the 30%, and then line 5 states they're limited to $150,000. Now, if you get folks that need help filling this form out, have their CPA or themselves reach out to me. You don't have to, you're not responsible for knowing anything about this form other than that it needs to be attached to their return. You don't have to assist them in filling it out.
Hey, Tricia.
Yes, sir.
What I typically do is, when I send you an email with a rural zone application, I go ahead and get that CPA's information on the front end, and I'll CC them on that original email. So that way, as part of our correspondence, when you provide the email back to me with the signed off rural zone letter, everything's on there. They have access to it. What I tell our applicants is, look, I'm the conduit to get you signed up. But once you have questions, concerns about how to do, what to do, let your CPA handle that directly with DCA, with DOR.
Perfect. And this is Taylor Smith weighing in, our wonderful rural zone team leader from Thomaston, Georgia, who will be on our call or on making a presentation a bit later. So please jump in anytime, Taylor, when you have suggestions as well.
Yes, ma'am. No problem at all.
Glad to have you here. All right, so here is the page 3 of the ITRZ, and this is where the business is going, that is taking the jobs, the job credit part of the rural zone credits, is going to fill this part out. So you could see they're going to write their county out, which I don't know why it matters for this, but I think they use the regular job tax credit form as the template for this one. So you put the county, the month, and year. So next to the number 1, the people are gonna put like January/2022, whatever. So like I said, this form, and Taylor said it's very complicated. You just have to give their CPA the information and they can run with it from there. Unless they're filling out the tax return themselves, then they can also correspond with me directly. Okay, so this is the page 4. It's continuing the calculation. And here's the page 5 of the ITRZ, which summarizes all of the credits on here. And it also says 10 years from the close of the taxable year. But I have a feeling that DR hasn't updated this. Maybe they have, but I will update this when I send this stack to you guys. So this is where I mentioned earlier. See, now I have my CPA hat on. I am a CPA. The listing of NAICS codes, you will all receive a copy of them. However, if there's an NAICS code or type business that is not listed on there and the locality, your community supports that business being in your downtown, this is where you can submit a letter to me and we could hopefully get it on the list for you guys. So the business is going to need to petition the commissioner for approval before taking the rural zone credit. So before they even think about taking the credit on their return, we got to get this in place so that we know they, yay or nay, they can take it or not. So you're going to ask in a letter format, a request for determination. So you're going to send me a letter, a dated and signed letter in paragraph form on company letterhead or your letterhead, the locality's letterhead, which is typically how I receive it, including, you know, the timeline of events, the business operations, their activities, what type of business it is, what kind of customers are serviced there, and if you guys are on board with the business being in your rural zone, you're going to include contact information and being as descriptive as possible. So if you're gonna snail mail it, which I don't suggest, do this. Send it to Christopher, which it'll end up on my desk, but maybe a couple weeks later. Send the email and don't send it to this OED address. Like I said, send it directly to me and we can get the ball rolling on making sure that if your locality is on board with that type of business being in your downtown, then I can move forward with explaining that to all the powers that be so we can get it approved. Any questions on that? Okey-doke. So keep in mind, allowed costs associated with the rural zone tax credits are based on rehab, not any cost associated with starting a business. We know that the tax credits are not transferable or saleable. If someone leaves that building or sells that building, those credits end, depending on what type of entity they are, whether they're investor, rehabber, or business in there, and they're not saleable. Credits can be used only against your Georgia income tax and not against Georgia payroll withholding. So it's just against the income tax. Now, keep in mind that if an individual is taking this credit on their, so say they're a sole proprietorship and they have a couple employees, whatever, the rules on credits aren't just against the income tax generated by the business. It goes against their entire income tax. Same with the business. If this is not their only location, the rules on tax credits are used against their bottom line tax liability. It's not just, oh, if they have a business in Atlanta and they have one in Grantville, they only get the credit against their Grantville tax due. It's not like that. It's against the entire income tax of that
Question
entity.
about that.
Sure.
So it's as far as I know you mentioned, you know, when you're certifying, when you're getting all the documents in order, how they file that needs to correspond to how they're going to file their taxes. So, you know, sometimes you have, of course, the sole proprietor. Sometimes you have the personal is a separate entity, and then the business is a separate entity. So, you know, when they you know, certify all of that, should they maybe include both? You know, their name as the personal person that they file their taxes under, and then also the business name with that.
They are going to file their return. They don't have to, but typically with a business, I'm going to need a name so I can address it to Mr. or Mrs. So-and-so. But it doesn't have to be that way, because if they are an S Corp or a partnership or an LLC, if the business is creating the jobs, but the income flows through to the individual or several individuals, it's going to flow through on their K-1. So it's going to come across and it will load up into their return file against all of their personal income taxes. So in the cases of like an LLC or an S corp that doesn't pay tax, or a partnership, you don't have to just put the business name on there or just put the individual, because when DOR sees the business type of return, they're going to see that the certification says it's to an individual, not to the business, and they may disallow it. I don't want to give them any part to not be able to take it.
So should they
whoever
include both when they certify?
They can, and I'll put both on the top, such and
Mhm.
such business,
Mhm.
so and so at such and such business. So it's up to them. But if it's just an individual and it's a sole proprietor, you can just put the name of the person on there.
Mhm.
I would say 75% of the certification forms are just in an individual's name that I've signed off
Yeah.
on.
Because I know all of the businesses that we're dealing with, yes,
Mhm.
they're the private individual and it may be best used, but then their businesses are separate entities.
Yeah. And that's fine, because then you're going to have some kind of contact name for that business.
Yeah.
And more than likely, more often than not, they will be someone that's one of the owners or
Mhm.
partners or shareholders. So yeah, you
So we'll
can put
just
both of
include
their
both.
names on there. Yeah, include
Just
both.
be on the
But say if it's a sole proprietor, it's up to you or them.
Mhm.
You don't have to, because the letter will be addressed to them and the business.
Okay.
And then the
Thank
copy
you.
of the certification form will need to go with the return. So it'll have both or one name on it. So
Mhm. Okay. All right. Thank you.
you're welcome. Okay. So in the case of any of these credits, the entity not creating the jobs needs to keep a good rapport with the job creator over the time so as to comply with the 2 FTE requirement. So the owner of the building, say they're taking the investment credit, they're going to have to check in annually with the tenant to be sure the jobs, find out, first of all, when they were added, and second of all, if they were maintained in the other years. So you're going to need to know what's going on in that business annually. Does that make sense to everybody? Because if the person's not creating the entity that's investing is not creating the jobs, how are they to know if the jobs were maintained? They've got to ask. Thought there's a question. Any questions? So as I stated, the credits are subject to Georgia Department of Revenue audit at any time. So make sure, like I said, copious records are kept. Proof is not submitted with any of the tax filings. They may submit proof to you guys for, I don't know what reason, just to know that they're covered, but probably you guys know what's going on in your downtowns, know who is hiring, know who has hired, that kind of thing. So no proof is submitted with either the certification form coming to me or when they file it on the tax return. There's no proof submitted. You keep it in the business owner would keep it in their records. So the same question you had earlier, I think, Dennis, can I combine the job tax credit with other job tax credit designations under the job tax credit, like county tier, military zone, less developed census tracts, or state opportunity zone? And the answer is no. However, if the new business chooses to take one of those regular job tax credits, it still will be okay for the rehabber or the investor to take their credits, because they're a more robust way of keeping track of your jobs. So, like I said, they're more stringent requirements under the regular job tax credit that more than cover the requirements under the rural zone. Another question I already addressed, the rules on certification form was filed last year. Now that the acquisition and rehab numbers are finalized, should the application be amended, or do we just file the final numbers on the tax return? And like I said, the final numbers go onto the ITRZ form filed. In addition to the 2-page letter from DCA and the rules on certification form. So you don't need to send in another one unless they're they thought they were only going to invest, but now they've decided to do some rehab too, and they don't have that block checked off, then file that. And like I said 100 times over, if you're not sure, just send me an email and I can answer yes, file another form, no, don't file another form. I'm more than happy to answer questions. Oops. So if the investor business cannot use all of the tax credits, can the business receive a tax refund? No, they can't receive a refund, but the credits can be carried forward for up to 5 years. So if credits are generated in year 1 and they can't use them all up, they move on to year 2. And then they generate more credits. Those also can't be used, but they can be carried forward, and so on and so forth until such time expires or the credits are used up. So if the number of employees that are being counted on for the credits fall below the 2 FTEs, the tax credit's not going to be allowed for that year. But then if the employees increase back up to the 2 FTEs before the window has elapsed, then they can start taking the credits again. And like I said, the tax credits generated and utilized in prior years will not be clawed back. They are standalone. They will continue to be carried forward in that case. Oh, this is a good one. So if there are 2 businesses located within the investor property and one of the businesses employs 1 FTE and the other business employs 1 FTE, can the investor take the investment and/or rehab tax credit? Yes. Since 2 FTEs were created within the one building property, it's allowed. However, the businesses that each created 1 job can't take the credit because neither of them have created 2 FTEs. And don't ask me how DOR would know. I don't know. They don't share with me, but this was an answer directly from them when this program started. Now, there may be, this program's only 7, 8 years old. There may be questions I still don't know the answers to because it's never come up. So I have a pretty good rapport with DOR in that we get on a call or whatever to make sure we're on the same page to come to an answer about a question maybe that asked before. So don't worry, we'll always get to an answer. Can the rehab tax credits be used to pay for the demolition of a deteriorated building? As general rule, the tear down of facilities within a rural zone will not be permitted to claim the rehab credits. And then option to discuss with DCA, like I said before. So labor and materials are the eligible expenses for the rehab tax credit. So if the lessee or tenant also makes rehab improvements, then yes, they can take the rehab expenses. So the rehab expenses can at the same time be taken by the investor rehabber or the tenant rehabber. So there could be 2 different types of rehabbing going on where the credit is allowed. So this goes back to your question, Dennis, about the infill construction. So we could have a discussion about that if that happens. So if a person purchased a building and rehabbed it, but they didn't receive a W-2, would they qualify as a new job? No. So they can't be subcontractors, 1099 folks. They have to be a W-2 employee to be counted about counted within the FTEs. Okay. I think this is about it. You'll get this full stack. So it's several of the FAQs we've gotten over the years and several FAQs we've discussed with DOR. So you'll get this stack, but like I said, I've got to change it to the 5-year carry forward period. Are there any questions at this point before we hop off for lunch? Anybody? Going once, going twice? Okay, I guess we will break for lunch, and then at 1 o'clock, we will hear a success story.
Okay, sounds good. We'll see you at 1 o'clock.
Sounds good, guys. Bye.
Thank you.
Taylor, you have anything you want to chat about? Oh, let me stop the recording.